Joining us now, Wealth Empire Chief Market Analyst Ross Gibbons. You think we've hit a bottom and we're bouncing back up. Is that where you're coming from?
Hey, Stuart, thanks for having me back on again. And yeah, I do. I mean, I definitely think we're on the way back up. You know, I was on your show about 10 days ago and kind of talked about the fact that I think this is a huge opportunity for investors. And there's a lot of great buys out there if people will kind of ignore the noise and identify the opportunity that it is.
You're an Apple buyer, is that correct? And Apple's about 112 now. You're buying Apple?
I'm definitely buying Apple. Look, I mean, I liked Apple at 120. I'm loving it at 110. I mean, the company's on track. You know, analysts are projecting they're going to do $9 to $10 a share in earnings this year and going forward. The stock's at, 110 or so. So you get a chance to buy one of the greatest companies in the world at, 11 times forward earnings. It's a no-brainer. And every time we've had this opportunity in the past, investors have been richly rewarded for it.
How about, did you like General Motors, GM, is that right?
I do like GM, Stuart, and it's one of those stocks, look, it's not sexy, right? It's not Micron, it's not a .com, but it's a real simple case, and one of the top hedge fund managers in the world, David Tepper, this is his largest equity holding, and for good reason. The stock's trading, what, $28, $29 a share now? They're projected to do $4.50 a share in earnings next year. So we got a forward multiple of like 6 or 7. It's uncanny. I think anyone who does not own GM in 2016 is really going to live to regret it and wish they had. It's going to be a huge run-up. Look, it keeps falling. I keep buying, Stuart.
Well, there's a boost. So you do own it, and you're saying it's going much higher than this. Ross, thank you very much indeed for joining us. I'm sorry to cut this short, but are we dealing with a plethora of news today?